Anastasia, from your vantage point, do you agree that if 10-year yields start to rise, if people's longer-term inflation expectations and rate expectations rise, that will be the game changer for risk assets?
I think it would, Lisa. That's one of the big reasons why tech had the rally that it had earlier this year, is because of multiple expansion as the 10-year yield was declining. I mean, I do agree that if the 10-year starts to rise, we're now repricing the longer-term inflation expectations. And fortunately, in the United States, what we've been recently repricing is the growth expectations. That's what drove the 10-year yield from 3.4 to 3.7%. But to the extent that the 10-year starts to rise because, all of a sudden the inflation expectations start to become more entrenched, that would certainly cause a problem for risk assets. And, to kind of go back to the point, Lisa, you were making about the UK CPI, I mean, it is stunningly high, but I also think it kind of showcases how the Fed has actually done a good job of getting ahead of the curve finally. I mean, if you look at the UK, you've got the inflation rate at 8.7% and their Fed funds rate equivalent of 4.5%. Now, that means that the rate is below the rate of inflation. That's not the case anymore in the United States. And the Fed at 5.25%, 5.5%, that's over and above the core PCE inflation of 4.7%. So that, to me, really sort of demonstrates that the Fed actually has finally done a good job of getting ahead. And I think that notion will give the Fed the opportunity to pause over time. And for investors, global, seeking to allocate to global equities, that's why they're going to continue to prioritize U.S. equity.